Welcome back, everybody, to another deep dive. This time, we're going to be looking at Tony Robbins' Unshakeable, your financial freedom playbook.
Okay.
And, we're hoping to uncover some secrets to financial freedom
Right.
that we can pass on to you guys.
Yeah, this book is interesting because he interviews all these big names.
Yeah.
Like Ray Dalio,
Warren Buffett.
Warren Buffett, Jack Bogle.
Yeah, these huge investors.
Yeah, so it should be good.
Yeah, so right out of the gate,
Mm-hmm.
Robbins talks about fees and, we always hear that fees matter.
Right.
But I think a lot of people kind of just tune it out.
Absolutely. I think it's because we kind of focus on those bigger, more exciting numbers.
Yeah.
Those headlines.
Yeah.
And fees just seem so insignificant.
The fine print.
The fine print, yeah.
Right.
Those little percentages just don't, trigger the same emotional response.
Right. It's kind of like, we want to
Yeah.
we want to focus on the sizzle, not the steak.
Yeah, exactly.
Yeah.
But Robbins makes a really good argument for why we need to change our perspective.
Okay.
He uses this analogy. If the market returns 7% over 50 years,
Okay.
every dollar you invest grows to $30.
Okay. That's not bad.
Yeah, not bad.
Yeah. Sign me up.
Sign me up, right?
Yeah.
But he says, okay, but if you're paying a 2% annual fee on your investments,
Okay.
that $30 shrinks down to just $10.
Oh, wow.
Yeah, so you're taking 100% of the risk,
Right.
but you're only getting a third of the return.
Wow. That's a big difference.
Huge difference.
Yeah.
And then he goes on to say
Yeah.
that overpaying by just 1% per
Mhm.
year can cost you 10 years worth of retirement income.
Oh, my goodness.
Yeah,
That's scary.
that's a scary thought.
Yeah.
here.
So how do we avoid this?
Well, he interviews a bunch of really successful investors.
Right.
And,
What do they have to say?
well, they say that you should really look into index funds.
Okay. I've heard of these,
Yeah.
but can you explain to me
Yeah.
what the big deal is?
Yeah, index funds are designed to track a specific market index,
Okay.
like the S&P 500.
Okay.
So they're holding all the stocks in that index,
Right.
and they're not trying to beat the market with constant trading,
Okay.
which means their fees are significantly lower.
So it's more of a passive approach.
Yeah.
Okay.
And studies have shown that most actively managed funds
Right.
actually underperform index funds over the long haul.
Even before fees.
Even before fees.
It's kind of like they're making promises they can't keep.
Yeah. Robbins even talks about Warren Buffett's famous $1 million bet.
Oh, yeah. Tell me about this.
Yeah, he bet against a group of hedge fund managers.
Okay.
And they're the best stock pickers out there, right?
Right. The experts.
The experts. So he challenged them to pick a portfolio
Mhm.
that could outperform the S&P 500 over 10 years.
Okay.
And guess what?
They're all-
They're losing.
Really?
Yeah, after 8 years, the hedge funds
Wow.
are lagging far behind.
That's got to hurt.
Yeah, and he even instructed his wife to just put her inheritance in a low-cost index fund
Wow.
after he's gone. So if it's good enough for the Oracle of Omaha,
Right.
it's good enough for us.
Okay. So index funds.
Yeah,
They sound pretty good.
yeah.
But what about our 401ks?
Right. Well, 401ks are meant to help people save for retirement,
Right.
but Robbins warns about some potential pitfalls
Okay.
that can actually sabotage your savings.
Like what?
Well, they can be riddled with hidden fees
Okay.
that drain your money over time.
So how hidden are we talking? Like, is this something that people don't know about?
Yeah. I mean, Robbins talks about how even his own company's 401k plan was charging these crazy fees, and he was shocked.
Wow.
And he had to partner with a firm to create better 401k options
Right.
for his own employees.
So how long has this been going on?
Well, for almost 30 years,
Oh, my goodness.
401k providers weren't even required to disclose their fees.
Wow. That's kind of
It's
intentionally deceptive. So what are we supposed to do? Like, who can we trust?
Well, Robbins says that you have to find an advisor,
Okay.
but you have to be careful because there are brokers
Mm-hmm.
and there are fiduciary advisors.
Okay. And what's the difference?
A broker is basically a salesperson.
Okay.
They're incentivized to sell you products that earn them commissions,
Oh.
whether or not those products are in your best interest.
So how do we avoid them?
You want to find a fiduciary advisor.
Okay.
They're legally obligated to put your interests first.
Okay. That sounds like a much better deal.
Yeah, and Robbins says
Yeah.
that you should find one that understands investments,
Mm-hmm.
taxes, estate planning.
A whole 9 yards.
The whole 9 yards, yeah.
Yeah.
You want someone who can offer a holistic approach.
So what about these dual registrants?
Oh, yeah, the dual registrants.
What are they?
These are advisors that can switch back and forth between acting as a fiduciary and a broker.
So they can just,
They can change role.
like, whenever they want.
Yeah.
So how's that even legal?
Well, it is, unfortunately.
It's like a huge conflict of interest.
Yeah.
So, okay, we talked about fees, index funds, 401k pitfalls, and finding a good advisor.
Yeah, we've laid the groundwork.
Okay.
And now it's time to dive into Robbins' Unshakeable playbook,
Right.
where he reveals more strategies
I'm ready.
for building lasting wealth.
Let's do it.
All right, so now we're moving on to the Unshakeable playbook.
Okay.
And this is where Robbins talks about his core 4 principles.
Okay, the core 4.
Yeah, these are like the foundational principles for investment success,
Got it.
especially in today's market.
Okay, lay it on me.
All right, so principle number 1 is don't lose money.
Don't lose money.
Okay.
It sounds obvious, but,
Sometimes the best offense is a good defense.
Exactly. Yeah, it's all about being strategic and minimizing your losses.
Okay.
Because even small losses can have a big impact on your long-term growth.
Gotcha. Okay, so don't lose money. That's number 1.
That's number 1.
What's number 2? Number 2 is all about tilting the odds in your favor.
Okay.
It's called asymmetric risk reward.
Asymmetric risk reward.
Yeah.
What's that mean?
So basically it's finding investments where the potential upside is much bigger than the potential downside.
Okay, so like high reward, low risk.
Yeah, you want to look for opportunities where you could win big.
Okay.
But if things go south, the losses are small.
I like it.
Yeah.
Okay.
He uses a great example of this.
Okay.
Paul Tudor Jones, one of the most successful traders, uses this 5-to-1 rule.
5-to-1. Okay.
He only risks $1 if he believes he can make $5.
That makes sense.
Yeah.
So it's more about looking at the investments carefully.
Yeah, analyzing the risks.
Making sure that
the odds are in your favor.
Okay, I like it.
Yeah.
Asymmetric risk reward. That's number 2.
That's number 2.
What's number 3?
All right, so principle number 3 is all about tax efficiency.
Tax efficiency. Okay.
It's not just about how much money you make.
Right.
It's about how much you keep after taxes.
After Uncle Sam gets his cut.
Exactly.
Yeah. Gotcha. So how do we do that?
Well, one strategy is to leverage the holding period.
Holding period.
Yeah, so if you hold your investments for a year or more, you qualify for that lower long-term capital gains rate.
Okay, so patience is a virtue.
Patience is a virtue.
Got it. Okay.
So, holding on to your investments can really make a difference.
It makes a big difference over time.
Yeah.
Especially with taxes.
Especially with taxes.
Okay, tax efficiency, that's number 3.
That's number 3.
What's number 4?
All right, principle number 4
Okay.
is diversification.
Diversification. Okay. Don't put all your eggs in one basket.
Don't put all your eggs in one basket.
Got it.
He really drives this point home by talking about some investors who put all their money in one thing and they lost big time.
Okay, so what do we do instead?
Well, you got to diversify.
Okay.
You got to spread your risk.
Got it.
Across different asset classes.
Got it. Okay, so what does a well-diversified portfolio look like?
Well, he talks about a lot of different asset classes.
Yeah.
He talks about stocks and bonds, real estate, alternative investment.
Alternative investments. Now, what are those?
Well, things like real estate investment trusts or REITs.
REITs? Yeah.
Which let you invest in properties without having to actually buy and manage them.
Okay, that's interesting.
Yeah. He also talks about master limited partnerships.
MLPs.
MLPs.
Okay.
And those focus on things like energy infrastructure.
Okay.
Pipelines and stuff.
So these can potentially...
They offer diversification.
Okay.
And potentially higher returns.
High returns. Okay.
But of course...
You got to do your research.
You got to do your research and understand the risks.
Understand the risks. Okay, that's a big one.
Yeah.
Okay, so we got diversification. We got asymmetric risk and reward.
Yeah.
We got tax efficiency. And we got to make sure we don't lose money.
Don't lose money.
That's the core 4.
Okay, but how do we make sure that our brains don't get in the way?
Right, because even with the best strategies, our own minds can sabotage our financial success.
That's true.
Yeah, he talks a lot about this.
Okay.
About the psychological barriers that prevent us from achieving financial freedom.
Yeah, sometimes it's like our emotions
absolutely
seeing in the way.
Yeah, our brains are wired for survival.
Right.
Not necessarily for rational decision making.
Especially when it comes to money.
Especially when it comes to money.
So what are some of the mental traps we need to be aware of?
Well, one of the big ones is confirmation bias.
Confirmation bias.
Okay.
This is our tendency to look for information
that
confirms our existing beliefs.
Okay.
Even if those beliefs are wrong.
Oh, yeah, I've done that.
We all have.
Yeah.
But Robbins says that we need to actively seek out
Okay.
Different perspectives.
Different perspectives.
Yeah, challenge our assumptions.
Even if it makes us feel uncomfortable.
Even if it makes us feel uncomfortable.
Okay.
He even talks about how Warren Buffett
Yeah.
attributes a lot of his success
Okay.
to being willing to listen to opposing viewpoints.
So open-mindedness.
Open-mindedness.
Okay, I like it.
Yeah.
What else? What other traps?
Another one is loss aversion.
Loss aversion.
Yeah, and this is the tendency to feel the pain of a loss
Okay.
more strongly than the pleasure of a gain.
Okay.
So we really try to avoid losses.
I've definitely felt that.
Yeah.
Yeah, like when the market's going down.
Yeah. And that can lead us to make bad decisions.
Yeah.
Like selling investments at the worst time
Right.
just to avoid losing more money.
Oh, man. So we got to learn to kind of
Yeah.
tame our emotions.
Tame our emotions.
It's okay. Loss aversion.
Yeah.
Got it.
Another one is overconfidence.
Overconfidence.
Yeah. Thinking we can beat the market.
Okay.
This one is more common in men, apparently.
Really?
Yeah. Studies have shown that.
Interesting. What about those get-rich-quick schemes?
Oh, yeah. He warns against those.
Okay.
He says, you shouldn't chase quick profits.
Okay.
You know, swinging for the fierces.
Right.
It's a marathon, not a sprint.
Slow and steady wins the race.
Slow and steady.
Okay.
Yeah.
So patience, diversification,
Mm-hmm.
keeping our emotions in check.
Yeah.
But how do we actually do it when the market's going crazy?
Yeah, it's one thing to understand these principles, but it's another thing to actually do it.
To actually do it, yeah.
Yeah. So what's the secret?
Well, Robbins says you got to have a plan
Okay.
and you got to stick to it.
Okay.
Write down your goals,
Okay.
your investment strategy,
Our roadmap.
your roadmap,
Okay.
and refer back to it when things get rough.
Gotcha.
He also says you got to have a good advisor,
Okay.
someone you trust
Right.
who can help you stay on track.
Kind of like a financial therapist.
Yeah, a financial therapist.
Okay. So we got our plan.
Yeah.
We got our advisor.
Mhm.
Anything else? Well, he also talks about rebalancing.
Rebalancing.
Yeah. So this is a strategy
Okay.
for maintaining your desired asset allocation over time.
Got it.
Because as some assets in your portfolio perform better,
Right.
they might become overweighted
Okay.
and throw off your risk profile.
So what do we do?
So basically, you sell some of your winners
Okay.
and buy more of your losers.
Oh, that's interesting.
Yeah, it sounds counterintuitive,
It does.
but it's the classic buy low, sell high
Oh, okay.
principle.
All right, so rebalancing.
Yeah, it's like hitting the reset button
Okay.
on your portfolio.
Okay, I like it.
Yeah.
Okay, so we talked about the core four.
Yeah?
We talked about how to
Yeah.
kind of get over those mental barriers.
Right.
But I noticed he keeps talking about real wealth.
Yeah.
And it seems like she's talking about more than just money.
Right. He's talking about living a life of purpose,
Okay.
joy, and fulfillment.
All right, so how do we do that?
Right.
How do we cultivate this real wealth?
Well, Robbins says that one of the most important decisions we can make
Right.
is choosing to be happy,
Great.
regardless of our circumstances.
So like focusing on what we have.
Yeah, focus on what you have.
Okay.
Be grateful for what you have.
Be grateful. Yeah.
Okay, he also talks about gratitude
Okay.
as a powerful tool for overcoming suffering
Right.
and experiencing true wealth.
Okay.
He even tells a story about John Templeton,
John Templeton.
who believed that gratitude is the secret to wealth.
Gratitude is the secret to wealth.
Yeah.
Okay, so how do we cultivate gratitude?
Well, Robbins suggests doing a 2-minute gratitude meditation every day.
Every day.
Yeah, where you just focus on the things you're grateful for.
So just being mindful and appreciative.
Exactly.
Okay.
And he believes that this can have a huge impact on your well-being,
Your well-being. Okay.
including your financial success.
That's interesting.
Yeah.
So gratitude not only makes you feel good, but it can actually help you make better decisions.
Yeah, it helps you make better decisions.
Okay.
Because you're not coming from a place of fear or scarcity.
Got it.
You're coming from a place of abundance.
Abundance.
Yeah.
Okay.
So Robbins reminds us that life is too short to be miserable,
Right.
to be negative,
Yeah.
to be stressed out all the time.
So find that inner peace
Find that inner peace
and the joy.
and the joy.
Okay. So we talked about the core four.
Yeah.
We talked about the mental game.
Mm-hmm.
And we talked about how to cultivate that real wealth
Yeah.
that goes beyond just money.
Beyond money.
So where do we go from here?
Yeah.
It's almost like he's giving us all this knowledge, and it's our job to go out there and use it wisely.
Yeah, and actually do something with it.
Right. So how do we translate this into action?
Well, Robbins, he's big on action.
Right.
And he says the first thing you got to do is define your financial goals. Like, what are you aiming for? Early retirement, a dream home, or just financial independence?
So define those goals. Write them down.
Write them down, make them real,
Okay.
and then create a budget.
Oh, yeah. Got to have a budget.
It might not be fun, but tracking those expenses
It's important.
can be a real eye-opener.
It is, yeah. What gets measured gets managed.
Exactly. You can see where your money's going.
Right.
And then you can start to identify areas
Where to cut back.
to cut back, exactly.
Yeah.
And then automate your savings.
Ooh, automate the savings. I like that.
Yeah, make it a no-brainer.
Yeah.
Set up those automatic transfers.
Pay yourself first.
Pay yourself first, exactly.
Right.
And then he also says ongoing education.
Okay.
You know, the world of finance, it's always changing.
Always changing.
So you got to stay curious,
Right.
read books, listen to podcasts like this one,
Right.
take online courses, whatever you got to do.
Seek out that knowledge.
Seek out that knowledge, yeah.
Okay, so we talked about finding a trustworthy advisor.
Yeah.
But what about some final words of wisdom?
Well, he reminds us that financial freedom is not just about the money.
Okay.
It's about aligning your finances with your values and your passions.
So like finding that sweet spot where
Yeah.
security and fulfillment meet.
Exactly. Yeah, he wants you to think about your legacy.
Okay.
What impact do you want to make on the world?
Yes.
He even talks about estate planning and charitable giving.
So giving back.
Giving back, using that wealth wisely.
It's nice to think that we can use our wealth to not only live better lives,
Yeah,
but help other people.
absolutely.
So this deep dive has been amazing. I think
Yeah.
we covered so much about building that solid financial foundation,
Mm-hmm.
but also that mindset of abundance and gratitude.
Absolutely.
But the main takeaway is that real wealth goes beyond just money.
It really does.
It's about aligning our finances with our hearts,
Yeah.
using our resources to create a life that's both prosperous and meaningful.
Yeah, living a life that matters.
That matters. And on that note, thank you for joining us for this deep dive into Unshakeable.
Thanks for having me.
Until next time, keep learning, keep growing, and keep striving for that life that's both unshakable and truly fulfilling.